The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Morning, everybody. Tommy O'Brien with Tom O'Brien. We got markets positive. Dow up 99 points. NASDAQ up about 29 points. And the S&P's positive by 11. Morning, Tom.
Morning, Tommy. How you doing?
Doing well, man. How are you?
Good, man. Good.
So another positive market, man. We got the VIX hovering in 13 territory. We got a little CPI data this morning. We got weekly jobless claims. And this market just won't stop to the upside, man.
Lots of action. You know, gold with 13.17 up 460. Now that baby was up at 13.23, so it's going to be interesting seeing what happens in that metal market. Now you get price coming, and you get volume. Same with the silver. Silver's up 22 cents, 16.68. And you know the note and bond market, they're coming back again. You know, they just had the 10-year note jump into the higher range again, up 6 ticks, 119.15. 30-year bond up 14, 143.03. King dollar, you know, down 194. Now, King dollar was down 400, and it has volume. So it's going to be intriguing watching this whole baby shake out today, particularly because, as we've been talking about, the Treasury is going to be pushing out a huge amount of notes, 2, 5, and 10-year notes out here. So we'll see by the end of today exactly what kind of demand there is.
Yeah, I don't know if you saw oil as well, declining almost $1 in like the last hour or so. So action everywhere for sure.
We don't need any more oil. That's it,
yeah,
right?
Right.
See you later. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And folks, if you haven't test-driven yet the TD platform, it's an outstanding platform. Come over to our website at TFNN. You see the banner on the top or the side. Hit it. Bring up the platform to allow you to trade with paper money. You can listen to Kevin and his team every trading day, 11 to 12 Eastern Standard Time. Get to understand options, get to understand the strategies behind options, and, of course, get to understand the futures market. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. How we doing?
Doing well, man. Good morning.
We got action, and, you know, it's intriguing, Kevin. There's a lot of movement between the bonds, the dollar, the market in general, and it's going to be intriguing, of course, with this dollar. You know, bottom line is that, you know, we're going to get a turn here, but it's been quite a run since April 14th.
Absolutely right. I mean, the dollar looks toppy up here, Tom. You know, now down. Let's see, the dollar future now trading 92.69 here. So everything a little softer in terms of the dollar future and the dollar index. But how about crude oil? Crude oil not holding above 71. It was up this morning. Pretty significant failure here in crude oil.
Yeah, we were 71.89.
Pretty quick slide to the downside in the last hour. Yeah.
Right. You know, here's my theory on this, and we just talked about it with Oliver Rennick on his show, is that Mnuchin made a comment yesterday that they have talked to parties, which in my case I think means Saudi Arabia. I think you got to be careful here with thinking that Iran's oil is just going to come off the market and go away. I think Saudi Arabia may fill in this supply. Because remember,
I can see that.
Who in essence is the U.S. Defending here, right? It's Israel and it's Saudi Arabia from Iran. So I think that Trump is highly sensitive of oil prices getting too high, and so I'm very skeptical of a rally too far in crude oil.
Yeah, no, I can see that. You know, it looks like the 75 is sticking out like a sore thumb. You know, that being said, you know, it's only $3 away. Do you know what I mean? So, you know, it's amazing, though, Kevin, when you think about it, right, that July of 2014, we're at $107. A year later, we're at $27.
Right.
2 years later, we're laying out here at 70 again. It's like, oh, my God.
Yeah, you know, but this crude oil trade here, in terms of 2018 and elections, could get political. That's why I think Trump doesn't want crude oil going to $80 anytime soon. So I think he's going to. I think that's a very political issue for the U.S. in terms of the midterm elections. So I don't think that you want people, I don't think he wants this hitting the economy, this, higher than $3 a gallon, and higher gas prices. I think this is going to be a pretty interesting trade here in crude oil.
Right,
it's not surprising to me that this rally failed.
And just as you're saying, we're coming into driving season.
Yep.
And the pocketbook issue is a big issue. And I'd say one of the biggest pocketbook issues is what does it cost to fill up your car? You're going away for the weekend. Is it $30 or is it 60 or 70? That hits real quick. Do you know what I'm saying?
Hey, listen, if your disposable income, if you have $100 and it used to cost you $35 to fill up your tank, now it costs you $50.
Yeah.
You used to have $65, now you have $50.
No, it's a big number, man.
Right, it could bring a dent. And make no mistake, outside of the oil industry, higher gas prices in the U.S. doesn't help anybody other than oil producers. Right? I mean, it's transportation, it's households, it's just a lot of things all across the board. So I think this is a much bigger issue than people are giving it credit for. Everyone thinks, it's only up to $70. I don't know. I think this is a bigger issue, Tom.
Yeah, well, they're not buying oil then. They're not filling their car up if they don't think it is, right?
I would agree, too. I said, who's saying it's only at $70, man? I see it every time at the tank, right? It's a very quick relation to your bottom line.
There's a noticeable difference, Tom.
Definitely.
Yeah. So what are we going to be talking about in swim lessons today, Kevin?
Today we got another really cool show. Joe Aracey, the managing director of Risk for TD Ameritrade, is coming on the show to talk about risk. And he's going to give us his views. Oh, yeah, it's going to be if you are into risk and how it's measured, how it's defined, Joe's going to come on the show and talk. We're going to have a great discussion with myself and Tom White from TradeWise and Joe Aracey on risk.
That is awesome. You and Tom White, folks, I mean, Kevin, you got a great rapport, man. I mean, going back and forth, understanding the strategies, it's pretty cool. Just out there every day,
Tom, he knows his stuff, but he has a different view on things than I do.
Yes.
Right? So it's a great back and forth. He doesn't look at it exactly the same way I do. Him and I used to stand really about 10 feet away from each other.
Really?
In two different trading pits, though. I was in GE, and he was in, Philip Morris and Apple, and he was in the pit right next door to me.
That's
so I've known him for years and years and years, but we never traded in the same pit together. But he was, like I said, 10, 15 feet away from me.
You got to love it. Lots of action out here.
Lots of action. You're right.
And that, listen, the notes and bonds, this is the second week in a row. We still got one of the biggest short positions in that 10-year note. So it's going to be interesting when that comes off later on today, when they start pushing these notes out, man. Pretty amazing. Listen, folks, right here, 45 minutes from now, Think or Swim. Great program. Remember, every trading day. Kevin, have a great one. Have a safe one. Of course, we look forward to the program in 45 minutes.
Thanks for having me on, guys.
Thanks, Kevin.
Thanks so much. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now up 95. Nasdaq's up 31. S&Ps are up 10. And guess what, folks? It's Thursday. Natural gas coming up. When we talking energy, natural gas is coming up. We have the gold contract up 620. Silver's up 22 cents. Notes and bonds. 10-year note up 6 ticks. 30-year bond up 14. And King Dollar. King Dollar down 244. Tommy and I come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tom O'Brien. Dow hanging up there, 73 points in the positive. S&P is positive by 8. NASDAQ positive by 20. Is that right? Yes, 27.
Yes.
So it is Thursday, right? We get our natural gas EIA inventory numbers coming up at 10:30 a.m. Eastern time. I'm jumping over here to the Nadex platform. So it's interesting here, before we dive into kind of the available trades, quite an acceleration we got over the last hour. Give it from about 8:30 a.m. We're trading at 272. We trade all the way up to 277, Tom, and we're pulling back a bit at 275. But pretty remarkable move, especially in light. Let's just jump to crude oil for a second, because as crude is plummeting in that hour, right? Yeah. You have natural gas kind of shooting up. Pretty interesting.
That was it's a monster, that's a monster buy in there, too. I get 9,300 contracts in 10 minutes, right at 9 o'clock.
Okay, Let me jump over to your chart. Do you have it up there? No? Oh, okay. That's all right.
I will get it up
That's
there.
Okay. I thought, okay. Yeah. Okay, so it's Thursday. We got natural gas inventory numbers coming up in 10 minutes at 10:30 a.m. Eastern time. And let's close out crude oil here. Natural gas, so we were just trading at about 271, shoots up to 276.05 currently. We're looking at the June contract in natural gas. So to start things off, let's take a look. So we have the available spreads on the left here. Whoops, that's crude. We'll jump into natural gas. We'll start it off with the 11 a.m. So the 11 a.m.s are going to give us an option with volatility trades potentially. We'll look at maybe buying a bullish spread. There's our bullish spread going from 275 to 295. There's our bearish spread going from 275 to 255. You get 20 cents in either direction. And what's nice here, Tom, is we're 1 penny away from where those spreads, kind of the pivot point that we're using for bullish being positive from 275, bearish being negative from 275. So the bullish spread is going to have 1 penny of intrinsic value, which is basically 10 ticks. So you're going to have $10 of intrinsic value. So that one's costing you about $14. Very little premium in there. And the negative spread, because it's all premium, no intrinsic value, costing about $7. So you're looking at $21 total, which would be 2.1 pennies away from that 275. And those
That's pretty wild that we've already had 7 pennies of movement in the last 24 hours.
Definitely. 7 pennies in the last 24 hours, in the last 2 hours. Just to put it, I mean, seriously.
Yes, right, right.
Okay, so those are your 11 a.m.s. Let's jump to the 12s. So the 12s are going to have the same exact price points, the only difference being that you're going to be paying for that extra hour of premium. And what's nice is you line up, so here's our 11 a.m., here's our 12 on the bullish side, and you can see the exact difference. Well, what's that hour going to cost you? That hour is going to cost you 2 ticks or $2. You can see that instead of 2.76.4, it's 2.76.6, right? Bid offer, exactly 2 pennies. And on the bearish spread at noon, so that one is just costing, it looks like, $1 to $2 difference. So the 11 a.m.s, again, we're going to cost us about $21. And to jump back, looks like the noons, you'd be buying the bullish spread. And this is for a volatility. If you wanted to have exposure on both sides, you'd be selling the bearish spread. And so you're looking at potentially about $24 for both sides of the noon trade. And again, we're always looking at both sides. When there's very little premium, I mean, if you're looking for an acceleration back to the downside, even, you know, that's where jumping back to the 11s, I know we're all over the place, but, man, you could initiate that trade, and you'd basically be selling it at 274.3. You're risking $7, and you have profit potential all the way down to 255. Now, realistically, yeah, it's probably has a very, very slim chance, if not zero, of reaching 255 by 11 a.m., but it was just trading at 272, which would be $30 if it got back to that level.
Yes.
So the directional trades, when they both line up with such little premium, could be attractive as well. So we set up the 11s and the 12s. Now let's jump to the 230s. I'm just going to close out some of these to clean up the screen. So what happens with the 230s, though, because of the volatility that we've gotten, is you can see that 270 would be our only option for bid-offer spreads there, okay? Now those are the 8 till 230s? Yes, and then let's see how the dailies line up. So the dailies are going to line up the same way. So that's tough because you're paying so much intrinsic value for the bullish spread. Just to demonstrate it, if you're buying one spread, you have 60 ticks, 60 cents, 6 cents, which is 60 ticks of intrinsic value. So just the bullish spread alone is going to cost you $63. So yeah, you could make that trade, but it's a very different trade in terms of capitalizing off of volatility in either direction. So, you know, pulling those up again, we'll jump back to the 12 o'clocks because those line up pretty decently with not too much extra paid for premium for that extra hour. And again, let's see how they line up. You're buying it. The bullish spread's costing you about 17. The bearish spread costing you about $8. So yeah, about $25. And what's interesting here, right, is that we always talk about, you know, yesterday we had oil, right, and we examined that you could be buying the premium, as in buying the volatility, paying for the premium, or you could be the person selling the premium. Now, what's interesting here, and the oil trade lined up somewhat nice, that you could have been selling the premium, looking for less volatility, right? Maybe after all the action Tuesday, you're looking for not too much action on Wednesday's EIA. But I just wanted to point out how on the natural gas trade today, it seems, that wouldn't be as advantageous because there's so little premium in this. And that's my market bias. And it's combined with the bid-offer spread as well in terms of this has a 7-tick bid-offer spread. So when you try and be the person absorbing that premium, just to demonstrate it, right? I mean, you're only going to be taking in $10 from the bullish spread. And realistically, because this is out of the money, it's almost a zero trade, as in, you know, they're providing almost no value because the bid-offer spread to the downside.
So that oil trade yesterday with the premium was a big one then. Yeah, that's interesting.
It was, and it would make sense, right? I mean, it's still, oil is rocking and rolling today. I mean, like we were just saying, oil just dropped $1, $2 almost volatility in terms of upward, downward in the last 2 hours. So I think that was probably priced correctly, right, in terms of the market reaction we've been getting in oil, but it just provided an opportunity to demonstrate at least where, you know, we always examine kind of the trades, and I like these types of trades where you're the one looking for volatility. You know, you're risking a small amount, hoping to make a larger amount. But the trades are out there. You can be the one selling that premium when you think the premium is overpriced, which yesterday in oil, it might have been a little expensive as we were setting up those trades because they were costing us, right, $50, $60, $70 for both legs of those oil trades versus today, you have both legs costing us $21 to $24.
Exactly.
So if you're on the other side of that, you're only getting paid the $21 to $24, and you're actually getting paid a little bit less because you have a bid-offer spread on either side. So that would translate to, you basically having 1 to 2 pennies of movement, where if it expires at $2.75, if you're the one selling the premium, that's your max profit. Well, if you're selling the premium and you're only taking in $20, you needed to expire within a penny to 2 pennies away from $2.75 to be profitable. And with the type of market reaction we've got today in natural gas, just to pull up the chart again, that seems like it would be a little intense to have it just be within a penny after it's been moving 5 to 7 pennies throughout the morning.
Wow.
Perfect. We got a break coming up. We'll be back in 3 minutes. We'll get those natural gas numbers, and hopefully we see it explode one way or the other for this volatility hypothetical trade. We'll see what happens.
Stay right there, folks. We get the Dow up 102, NASDAQ up 31, S&P's up 12. Tommy and I come right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now up 117. We get the NASDAQ up 35. S&Ps are up 13. And it looks like, Tom, EIA says natural gas stockpiles 89 BCF.
rising 89 billion cubic feet, right?
Rising.
That's a big one. Yes, and that's pretty close to expectations. So I see the median estimate being approximately 90 billion cubic feet, and then they had the Bloomberg survey being a rise of 94 billion cubic feet. So pretty close to the estimates nonetheless. And let's jump back over to the chart. So you have a slight reaction to the upside, and pretty remarkable, like we were just talking about, right? In terms of so little premium, any type of movement, and already we've gotten over about 2 pennies a movement. If you were selling the premium today, that would not have been a good trade in natural gas. And yeah, so we're trading higher. Natural gas currently trading 278 on the dot practically. So this would be our bullish spread I have up here. The noon trade we were looking at potentially 275 to 295. That's the one with all the value right now, as we're a solid 3 pennies in the money. And already you can see that you'd be able to take off about $28 to $30 off the table in value if you wanted to. And then, of course, if you were trading the volatility trade with action on both sides, the bearish spread would remain active until 12 o'clock if you happen to get a turnaround in the market prior to that number. But pretty remarkable, and that's why, you want to get used to this. If you haven't downloaded the demo account, just so you are familiar with the types of premiums that are usually priced into these products, because, you and I, Tom, we were just looking at it. That was a pretty reasonable premium level. Yes. With the type of move that we had gotten this morning already, as in you already have volatility in natural gas, and with the numbers about to come out, just very, very low levels of premium priced into that product. And as you can see, already we're up at 278.5.
This is a big movement, particularly because we already moved once prior to these numbers. And this thing is strong. And what's amazing is that, and Andy Heck talks about this a lot, the natural gas market is so deviant. So picture this. We had a wicked winter, right?
Yes.
Natural gas couldn't hold. We're coming into the summer. It's got to build, and guess what? It's going up.
Yeah, no, for sure. I mean, pretty remarkable that we're up almost 7 pennies. I mean, really, the lows at about 5 a.m. We were down there under 271, 270.95. And now we're approaching 279 just in the span of, that was about 5 a.m. So call it about 5.5 hours. We've climbed from 271 to 279, and we're making highs as we speak, approaching 279. And in these spreads, you would add profit potential, which is nice, all the way up to 295. I mean, any realistic move prior to 12 o'clock will be encompassed within that, as in, having 20 cents of potential profit with defined risk. And just to reiterate as well, the directional trades, if you had looked for the trend to continue this morning, that upside was only going to cost you about $14, 10 of which was intrinsic value, as in you were able to get in at about 276.4, which is about 14 ticks, 1.4 pennies above the floor of that bullish spread, but a full penny of that was intrinsic value. So it's remarkable, the low level of premium, whether you wanted to trade directionally or whether you wanted to put both legs of it for a volatility trade. Pretty cool. I mean, these volatility trades have been pretty cool to follow. I know we always check them out, but the last 3 or 4 weeks with oil rocking and rolling, we looked at the oil, pretty similar trade that we pulled up on Tuesday, right? Checking out ahead of the Iran deal pullout.
Yes,
and
at 2 o'clock.
Again, we were able to put on a daily kind of similar volatility trade if we wanted to for crude. And man, Tuesday, if you follow that crude market, just explosion downward, upward, all around. So the commodities, those natural gas and crude numbers, quite the number. So we'll check back in. But already a decent move, about 2.5 pennies to the upside. And like you said, it's interesting. The numbers came in pretty much in line, and we've already exploded 5-6 pennies to the upside, and still we're trading higher in natural gas.
Seriously.
Definitely.
Let's go over to the gold market. So gold out here, we'll stay with the commodity deal here. So gold out here this morning, folks, big bid on gold. You have the volume behind the move. We got 277,000 contracts. You basically got over all the swings of the last week. Now, there's going to be, it's a big day, because this would be, if we can stay inside this 13, 15, 13, 14 number, this would be considered a sign of strength, because this is early in the morning to have 277,000 contracts. That's saying we're going to end up doing about 350, and we'll see, we've got up to 1323. Now, silver is doing the same deal, meaning that silver caught a nice bid also. Silver is up 1.2% right now. Silver also, you can see it's sticking out like a sore thumb. You have 59,000 contracts traded. You've cleared the last, let's say, 7-8 days of trading. So that's a good indication that I want a higher price. And we'll just do the exact opposite, which is the dollar. You know, the dollar down 24,000 contracts, and I would say the camp's still out in the dollar. It was a nice expansion down when we got those inflation numbers, but it's made it all the way back. So it's like, okay, the dollar's not done yet. You know what I mean?
Definitely.
Well,
quite a turnaround. No, for sure. Quite a rebound off those lows.
You know, and for all you folks that are in the metal market, if you want to see another indication that this looks to me like we are really going to go topside, Pan American Silver last night came out with their numbers. They beat, and they beat everywhere inside their numbers. Look at this acceleration.
Quite a move.
Up $1.95. It's taking out the consolidation. Now, what's intriguing about Pan American Silver right now, folks, is this. This may be a very large ABC structure on the way up. If we bring this back, you're going to see where we are here. I'll have to bring it back like 5 years. What you're going to see, your first leg, which was the low that was established in 2016, is $5.38. Your top of that is 21. So you can see, if I just take this, let me move this back a little. I'm going to break this down so you can kind of see where we're at. What we have happening out here today is that we are breaking the downtrend, you know, with basically conviction. You can see, you get the wide price spread. Now watch this. When I take this on a monthly, what you're going to see now, you're going to get some clarity as to what we've been doing. You can see Pan American Silver, the high 2011, $42. Your low is like $5. Yeah, $5.38. You can see this leg here. We've been here for quite a while. So it's going to be intriguing because this will be one of the first ones, folks, that you actually get an indication that one of the weaker ones come off the bottom. Will it have the volume to do an ABC up or not? But we're going to find out real soon. Because
and you're talking about one of the weaker gold equities, correct?
Yes, exactly. Right. Whereas the Royal Gold has stayed up at the highs.
Okay.
Franco-Nevada, not next to the highs, but not like this. It didn't go from $40 to $5. Yes. You know what I mean? So this is a decent indication, that we get some action. Now, just the opposite of that inside the gold market is Rango Resources. Big trouble. Rango down $5. You can see this is an ABC down, breaking down. Now, this is always one of the strongest gold equities out here. And this thing is still in a consolidation. It looks like it's going to go after this $67 mark, and you have 76. And what that's about, their production has gone down.
Okay.
They're having let's see. So Rango Resources fell the most, a series of setbacks across the African mines.
That'll do it.
And they have a great mine, but they're in a dangerous political situation there.
Okay.
Stay right there, folks. Tommy and I are coming right back. Dow's up 131, Nasdaq's up 39.
To stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
We have the Dow up 134, Nasdaq's up 41, S&Ps are up 14. Percentage-wise out here, folks, you have the Dow up 0.5%, Nasdaq's up 0.5%, S&P's up 0.5%. Some of the higher volume stocks out here, let's take a look at them. We have, let's see, Advanced Micro is up 5 cents. You get GE down 6, no big deal there. Oh, Macy's is getting hit. Well, take a look at that. That's down $1.50. You have NVIDIA. NVIDIA is up $2.40. Now, NVIDIA, Tom, is coming out with his numbers after the close today, and I believe we're at an all-time high with NVIDIA. Yeah, it hit an all-time high today. Pretty interesting, man.
Definitely.
And, you know, as we're talking numbers, we're talking options, we're talking our man, Mr. Dave White, a week from last night. He's going to be doing a webinar, folks. This is going to be an actionable webinar because what you have is that as you going up to option expiration, which is a week from tomorrow, our man Dave White is going to be doing a webinar for all his subscribers this next Wednesday, 5 o'clock.
6 days from right now. That's right. It's going to be here in no time. So Dave, he loves those option trades approaching expiration. So we're talking about doing a webinar. He said, how about I do one right, leading up to expiration? We said, that's great. We're talking about it last month. So we set it up for May. And May 16th is around the corner. So subscribers to Path of Least Resistance, his daily trading newsletter, a little bit more active, right? Versus he has the Tech Insider, which is geared towards technology, weekly letter, sending out updates all the time, though, for Tech Insider as well when warranted. Both newsletters, subscribers to either newsletter gain access, and like we've talked about during the week, I encourage people to go in and sign up ahead of time because Dave's already talking about possible setups, possible trades. He may already have some trades on by the time that workshop begins on Wednesday evening. But it should be a great workshop. Dave loves those trades, so real application of trading methodology in there in terms of what's going on in that market. Premiums, like we talk about on the Nadex platform, very little premium leading up to that expiration. And just Dave talking about swing trades and expiration day scenarios. He loves the term asymmetrical trades, right, which is risking not risking the same amount that you expect to make, as in it would be symmetrical if you're risking $1 to make $1. Asymmetrical is risking $1 to maybe make $5 or $10. Right. And that's where, you're risking whether it's 25 cents on an option, maybe it's $1 on an option, hoping to make multiples of that investment if you get move in your direction with the final maybe 2 days of prior to expiration.
No doubt. And, I get the VIX up here, and there's certainly no fear in the market. Now, we popped under, we're at 13.28 right now.
Pretty remarkable. And it would make sense, as in we haven't had a huge downdraft.
No.
You know, we had that 400-point down day in the Dow that we reclaimed all of those losses before the close about a week ago. I think maybe it was 1 week ago today, right? Last Thursday, I think. Yeah, right. That bar. When is that? May 3rd. Yes, a week ago today. Right at this time, we were down 400 points in the Dow at 11 a.m. and by the close of the market, and that's the last time that we kind of had some big market action. So we've had a nice week for sure.
And, you know, if we look at this S&P, folks, what you're going to see, you know, the last swing point up here, swing high, that is, April 18th, that swing high at 271.30. We've hit 271.07. Now, that also corresponds with how we gapped down on the 21st of March. So this level here is going to be important, you know, because bottom line, you know, we'll see whether we can break into this level.
Okay, cool.
We'll go to look at the NDX one. Well, actually, let's look at Macy's. I want to see what happened with Macy's here.
Excuse me.
Poor Macy's. Macy's has too much space, man.
Yeah, Morgan Stanley downgrading them on declining sales, profit pressure from online. Well, anybody that's been following the market should be able to follow that one, right? It's like...
Yeah, doesn't look like, that's all. Oh, that's intense. That, like, it wasn't their numbers. It's interesting. It's just a downgrade. Yeah, they're coming out the 16th of May. Yeah, okay.
Yeah, and so I'm just reading some tidbits about it, as in Macy's continues to undergo core operating challenges similar to peers in the department store space. Despite closing stores proactively, store-only comps remain negative. So that's where, you know, they're trying to close the stores that are the underperformers, but if store-only comps are remaining negative, they're keeping the good stores open, you know, and so if those numbers are still not good, not well, to put it, you know, very, very simply, then that's where I think they see, you know, those are supposed to turn around, as in you're closing the underperformers, you're keeping the stores that are doing well, and still they're struggling to have any type of attractive comps.
Yeah, and you know what it seems like? It's really intriguing. It seems that even like big brands, big clothing brands themselves, whether, you know, it's a Perry Ellis, you know, whatever brand, you know, you happen to buy, it seems that they are starting to get more traction even on the internet. And for them, that must be awesome that they're selling directly versus going into a retail store, as all of us get used to being online more.
It's double-edged, right? It's double-edged, as in it'll be interesting to see how it shakes out in terms of, you know,
that would be, I get that.
You have to proactively pull up their website, pull up that brand, versus, you know, being in the store, seeing something you happen to like. It's more of a proactive approach to purchasing something versus how often you purchase something that you may not have known you were going to purchase. You might go shopping, right? But you don't know what you're going to get. You might want some new clothes, but you don't know what brand you're going to get. You don't know if you want a, you know, a button-down shirt, or do you want a polo shirt, right? Do you want slacks that are this brand or that brand versus, you know, but I agree, and that's what they're trying to figure out, right? Because if you do have that loyal base of customers, then yeah, you've got it made, right? Because you're cutting out the middleman, and if you can keep up the sales. But and I don't know the department store business too well, but I wonder how that factors in, as in how much of their business is people that show up at the big malls. You know, like in Tampa, we have International, right? We have West Shore. Those are the malls where they're keeping every store. No stores closing in there. So what are the dynamics like for people that walk to that store? Do they know what they're going to purchase? I don't know. I usually have a pretty set plan. I know you do. You know, we have where stores we're going to. But we don't necessarily have the brands, I think, in our head. We might have stores. It's interesting.
I agree. I can see that. I've just noticed myself, once I get something I like, now I actually do go on those brands and say, oh, this is great. Because what ends up happening is that they don't charge for, you know, sending your stuff either.
Oh, no.
You know,
they're way past that.
Yeah, this is not bad. But what does happen, I guess, is on the other side of that, is that they're losing a lot of business from distribution from all those big stores. So they have to make something up.
It's a little double-edged, right? Exactly. And that's but I agree. I mean, there's, you know, I'll give Cole Haan, I'm a big fan of, especially their shoes. I know it fits. I can order them online. It's super simple. They have some good deals occasionally online. And so
I think Nike still owns them, right?
I believe so, yeah, as you say that, yes. And that's why actually they're great shoes, and they have Nike soles sometimes. Give them another plug, why not? And they actually, I have a wide foot, and so they make wide shoes, and so that's not a common thing for nice dress shoes where you get a wide sizing.
See, that's why Nike's at highs.
That's why Nike's at highs. There you go.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now up 135, Nasdaq up 41, S&P's up 13.5. Don't forget, folks, jump on our website, TFNN, sign up for Dave's webinar. It's going to be a great webinar.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. Dow's up 143, Nasdaq's up 41, S&Ps are up 14. Let's go over to that gas contract, Tom. Pretty amazing.
Let's check back in. Pretty amazing indeed. So natural gas currently, it's about just prior to 11 a.m., right? So we've had about 25 minutes of trading activity after the EIA numbers, and we're a solid 3.5 pennies above where we were trading just from the news. And so I pulled up the bullish spread for the noon, just to give an example. If you were closing this out, you'd be able to gain about $42 of net value right now. Those trades are costing us about $24 for the noons. So decent action, and this still, you'd have, you could trade this, you could leave it open, as in this goes all the way until noon. So you have over an hour of trading left, and it doesn't seem like natural gas is slowing down just yet, but quite a move, and pretty remarkable, even just looking that it wasn't really too surprising of a number, coming in pretty close to estimates, and the trend is upward today on natural gas so far.
Pretty amazing, man.
Pretty amazing.
It really is.
Definitely.
And let's just go check back in on the dollar. So dollar is making a comeback out here, folks. It's going to be intriguing to see how this is going to shake out. You know, right now you hit a low of 92.390. We're at 92.845.
And, you know, just to throw out there, the other news out there, I don't know if you saw coming across the headlines, is that June 12th is going to be the meeting between President Trump and President Kim Jong-un of North Korea. So about a month from right now, I'm sure there'll be lots of rhetoric leading up to that meeting. We'll see if it happens on that day, but that is the day that they've chosen in Singapore for their place of meeting.
You got to be love being in the market. There is so much happening, right, every day right now.
Very true.
And it's like, okay, we'll find out, you know, does that meeting, what does that do to basically indices? Doesn't seem much right now.
Yes.
Stay right there, folks. We got swim lessons coming up next. And, of course, then we get our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon as well as Andy Heck. Tommy, have a great one. A safe one.
You too, man.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.